Eric Muadid, Muadid.com. Let's take a stab at seeing how we can play Apple, and I think I have a number that is easy to remember and might give us a nice reference point on how to play this. Right now trading at about 95.03 or somewhere in that range, about 95. The number to watch is 96.96, which happens to be this weekly closing low. First week of this year, January 2016. So we've come back after we've had 2 positive weeks since the close at 96.96, and now we are back below that. So this is a fresh break. So right now the stock is not in play. So as long as it is below 96.96, the stock is not in play. But if it recovers back above 96.96, the stock is going to be a buy for a bounce, in my opinion, especially for anybody who wants to be a long-term holder. You can use the stock being above 96.96 as a buy signal and hold as long as it holds above that level. So let's take a look at some of the things here from a technical standpoint as to why the stock could be a buy. Number one, if you take a look at the fact that the 10-week moving average, first and foremost, let's take a look at the 10-week moving average. 10-week moving average is making a fresh 52-week low, has been trading at fresh 52-week lows for some time, and we've been saying for a while that because the 10-week moving average has gone to a fresh 52-week low, chances are the stock might have to take out this intraday low. So we've come close enough, but maybe it might have to take a look at this, or maybe retest these lows of August. So that's what the 10-week moving average is suggesting to me. But the key again here is whether it holds above 96.96 or not. So that's one of the downsides here, and again it's a simple break, as you can see. So right now it's giving us a sell signal because it clipped below the previous weekly closing low, and it remains a short as long as it is holding below 96.96. The reason why I say that is because if you take a look at a 3-year monthly chart, the stock is trading with its RSI close to 3-year lows. So very close to 3-year lows, which is a major sell signal. One of the MACDs as of right now is trading at 3-year lows. As we know, that's a major signal. On the downside, we have to respect the potential for downside. So below that breakpoint of 96.96, and the fact that the monthly chart doesn't look very healthy, we have to be aware that the stock can still go much lower. But if the stock can recapture this 2016 weekly closing low at 96.96, if it can trade above that, then we can take a look at the longer time frames that we've been looking at for why it could bounce. So number one, if we go and take a look at this 5-year weekly chart, so 5 years of data on the weekly chart, and we can see that there's a simple line right now where it has been bouncing since 2013, and this line came about because once we moved above this range here, the market moved off the lows here, right there, in fact actually off the lows there, and since then it has bounced on the green line for a nice support entry. Bounced on the green line recently, middle of 2015, for the lows here before this swing trade to the upside, and now we are coming back to test that green line. If we hold, there's a chance the stock can go higher. That's one view. The other view we talked about was the line connecting the lows like that, and as of right now you can see that if it holds this line, then that's also going to be where you want to go long, for those of you who like to own this instrument longer term. So this is 5 years of data. Let's take a look at 13 years of data. Number one, what we're going to do is test the previous support line coming off 2013. So this line here, slightly lower. So we are going to back test this line to see whether it's legit, right? So let's go backwards and backwards and backwards, and we see off the lows of 2003, you can see that, but it's right there somewhere in there was a low, the market held. We held here in 2006 for the lows smack perfect there. We held here for the lows of early 08 here before the stock went higher. Finally, we cleared this line, which also happens to be where it coincides with the green line, and the stock hasn't looked back since. We came here, and as we noted again, we moved above this range and above the green line, and of course that was for the entry somewhere here, and it became support as we saw on the five-year weekly. All these have been short-term entries. In other words, this line is legit. It goes back many years on this weekly chart, and if it can hold here, the stock could have a chance of giving long-term holders a reason to add, or for those of you who want to go long for a while, hold for a couple of months, maybe for 12 months, 24 months, who knows. As long as it is above that 96.96 level, I think you can take a stab at this and see what happens. All right, now there's another line that we can draw here, and it's a simple line connecting the lows of 09 on a weekly chart. It doesn't get any more clearer. If we hold on this line, the stock should bounce off current levels. You can see that if that holds on a week-to-week basis, one can expect the stock to move higher. The risk is if it doesn't move above 96.96, it might go on to break this line. You don't want that to happen when you're holding that, and it could also break the previous support line somewhere around there. So if it breaks those two lines, then the risk is to the downside. So that's why I say wait for confirmation of support by allowing the stock first and foremost to prove itself by moving above 96.96. Let's take a look at the monthly chart. Same chart. Instead of weekly, we are going to go to the monthly view of the same 13-year monthly chart. Just want to show you a simple way of looking at this. Take the lows, connect them. Lows of 09, in fact, if you go to the lows of 03, same line. Little adjustment, but same line. You can see here that if this holds, we are gonna get a bounce somewhere around here if it holds, and it's a big if. Let's take a look at the hourly. On the hourly, you can see here we are making an attempt to break recent intraday lows there, but while this is taking place, we see a slight improvement on the hourly RSI. So this could be an area where it could find stability. Take a look at the 30-minute chart for those of you who want to time this closer, and we just take a simple line connecting recent RSI lows and extend it. And you can see here when it hit 94 earlier today, it held and is bouncing. So on a 30-minute chart, there's a chance it is finding stability around here. Even though that is the case, I still think the best way to look at this, for those of you who want to be long-term holders, just give it $1 or so. Let it move back above 96.96 for it to trigger a buy signal. But right now we can see on the short-term charts that it is doing its best to hold support, and maybe the 30-minute and the hourly are trying to predict the next move. Now if you take a look at the daily, you can see the daily is doing exactly what the S&P 500 might do, which is coming back to test the recent break. So here we can see on the daily another reason to be skeptical of any bounce attempt, because this is where it's broke down in late December or mid-December off the highs here. We've come back and hit that level, and now we are pulling back. So I'm sure you've had this a couple of times in this video. This is your line. Below it, the stock is a sell. Above it, the stock is a buy. Eric Mwathe with Mwathe.com. As always, good luck, peace, and blessings. EACS.